180. But a lot of options barriers, I imagine, at 160.
Yeah, very much so. Once I flagged in the dealing room this morning, one of our chat rooms, there are offers between 159.80 and 160 to figure from guys who just have a natural interest to sell the pound. 160, a lot of optionality as you can imagine, but I think 160 is the capitulation point for anybody who's betting on a lower sterling on so-called Carney trade. And I hear from options markets that above 160 to 161, the market is getting short of gamma and will have to buy the pound. So there's a big space there. And if you're short of sterling, you should remember what they said in that, I think it was Aliens too, in space no one can hear you scream.
Nor can you read the minutes of the MPC meetings either, which today contain quite an important line on the pound.
Paragraph 16, if you haven't seen it, I suggest you read it. Basically, as I said on previous weeks when you invited me on to talk about sterling, the UK MPC at the moment sees strong sterling as a convenient fact. It supports forward guidance by bearing down on imported inflation. One central banker said to me this morning, you know what's going to happen with the pound, Neil? It's going to go to 163, then everybody in the spec market's going to fall in love with it just before it collapses back to 157.
Okay. Of course, it's not just cable. There's euro sterling as well. You see that lower, but we're approaching a big technical level. We've
got a couple of big levels here. From a perspective of sterling euro, which I appreciate the banks don't quote, but 120 on sterling euro is 83.33 euro sterling. UK importers would love to buy some euros and sell some sterling there. And then beneath that, the key one for me, the 100-week moving average 83.09. I would fully expect Eurozone exporters to come in and fill their boots with euros down there, because with the forward points you can lock in a lot of hedges a fair way out below the 85 cents, which is the budget rate for many of these Eurozone exporters.
If the Fed doesn't taper, if there's zero taper today, what would you do?
Market's going to be gobsmacked. They've been lined up for this. I mean, most people I talk to are looking beyond the taper to what 2016 forecasts are going to be, implicit on where interest rates are going to go. But if it's zero, my presumption will be initial knee-jerk dollar sell-off, and then the market will realise, hang on, they're still doing 85 yards a month. US stock markets go up, dollar starts to rise. I would buy dollar yen.
Buy dollars. 5 billion?
I would also buy dollar yen on this because I think it would be supportive of US equity markets. It would encourage Japanese to go offshore.
10 billion?
10 billion, that's the tricky one. That's the one right in the middle. You know what? I think it should be priced. Net, I think it's probably balanced for the equity markets. If anything, I'd buy cable on that because of the reasons we discussed about in the first part of the programme.
And if they are on the hawkish side and go for 15 billion?
I think it's very bad for the US asset markets, US stock markets go down, and I think on that basis you would see the dollar get sold off, and I think cable would be your best bet. First stop 162.